Good morning. It's been a long time since we've talked by video, and there really hasn't been any hard news. There's been a ton of noise, but no real news. I think we've got some news this morning. The Republicans released the outline of the new tax bill, and that outline is after considerable hammering. So I would guess that in large part, if we do get a tax bill that flies, it's going to resemble what was released this morning. The Republicans have now entered into the realm of picking winners and losers. So there's very little differentiation between the two parties in that regard in this country. And depending upon who you are, you've got to figure whether the people in Washington are going to do something for you or something to you. And we're sifting through the information to try to see who the winners are and who the losers are. But let me just tell you that from a social viewpoint, tax reform, we don't want to address. I mean, everybody's got their own beliefs of who's entitled to what freedoms and who's deserving of tax cuts and not deserving. We don't want to go there. We simply want to analyze the proposal from the standpoint of winners and losers in the marketplace, and how we can do an interpretation of the code to help you make more money. From an economic, financial standpoint, we do have some comments. If economic growth was the main objective of this tax reform, I give this a C+ or a B-. The real growth from tax reform comes from lowering the marginal rate on things so that individuals who own corporations and own private businesses, individuals with capital can make a determination on after-tax rates of returns as to whether they should go forward with a project, take the risk of starting a new business, what have you, or not. There is no marginal improvement in the tax rate. So this aspect of growth is out the window. In fact, the 1% of taxpayers now that pay approximately 40% of the tax can be expected to pay a bigger chunk of the tax going forward. So that aspect of a growth plan is pretty much out the window. But there are winners. A company that pays a 35% tax that will be paying a 20% tax on taxable revenues gets a huge cash flow windfall. And that's going to be good for readjusting the value of these companies. And we're scurrying around really trying to sift through and find those specific companies. Got to be careful, though, a company with too much debt, because there is an apparent cap on the deductibility of the interest that corporations pay, and that cap is 30% of what they call EBITDA, earnings before interest and taxes and depreciation, commonly known as cash flow. So if the interest expense is more than 30% of that, it will not be deductible, and that would change earnings. There is a rather convoluted transition with regard to companies that do business in foreign countries. At the end of the road, it looks good, but getting to the end of the road is there's some taxes and some disallowables and things we haven't quite figured out yet. But basically, if we could find a company that operates in the U.S., does not borrow an excessive amount of money, pays a 35% tax rate, that company is going to get a cash infusion by way of this tax cut. And what that company does with the cash infusion, paying higher dividends, expanding their business, and what will have some positive economic growth. So net on net, in the aggregate, we think this is a somewhat positive for the country. And remember, we've had tremendous deregulation, which is like a big tax cut already. So those two things give us an inclination of a positive view of the outlook for the markets. Not huge. Had we accepted a lower marginal rate as originally proposed and taken the package as proposed, In fact, I ventured this prospect to clients last year that if we get that kind of a thing, you could look for 25,000 Dow this year, and maybe 30,000 a couple of years out. I mean, I would look for quite dramatic growth. I think those projections are out the window. Looking for a 5 or 6% GDP growth out the window, but maybe we get 3.5 to 4%. That beats the pants off of the 1% we've been slugging through while we're borrowing excessive amounts of money for the country. So things are on the bright side. The glass is indeed half full. One more thing, the new Fed chairman appointee, Powell, is probably going to be Yellen-like and be somewhat accommodative. So we don't look for a lot of opposition from a strong-handed Fed that's going to take money away from the party. So far so good. We've got to go dig and filter through stocks and try to find the winners and sell any losers we may have. We think we've anticipated this pretty well, so our list of stocks are pretty good. We don't see too much activity there, but we've got to look. Anyway, have a good day.